Today we'll be talking about risk-reward ratio, and I'll be telling why it's not really very important for you as a trader to be aware of this factor. Now, can any one of you tell me what is actually risk-reward ratio? Okay, so we have a couple of answers here. Ripple says how much you stand to lose versus how much you stand to gain. Gopi comments, you are prepared to risk a finite amount for a definite reward. It's what you are willing to lose in order to win, Tariq says, and Kim comments, it's your exposure. And this continues, etc. Now, I will be talking a little about it, and that's actually indeed why I have demonstrated this funny cartoon on my slide over here. Risk is something we all are aware of, but reward is something that catches us all the time. Like these foxes or whatever, raccoons looking at those birds, the only thing that they care in their mind is the bird. And only one of it is, well, fortunate enough, is talking about the threats that they have. And that's indeed what it will take them to get those words through. Trading Forex is something everyone is talking about nowadays, okay? Everyone is talking about how much they make, how much they can make, or how rich they are, or how rich they can be. But you will rarely be seeing people talking about how much risk they are taking in order to make those monies that they are possibly showing for you that they have made. In my case, I have managed to turn multiple times a 5-digit account into 6-7-digit profits. So I took as a risk my 5-digit account, and as a reward, I got the 6-7-digit that I was after. Now, if you look at the traders overall, in order to be a profitable trader, you have basically 6 elements in front of you. These start with risk, reliable trading platform, cost, basically cost of trading, time you invest to trade and the time of the trading, emotions, and the return. And now, if you look at a usual trader will prioritize these criterion or these elements from 1 to 6 the following. You will be probably going after return as first, risk second, then you will go for time, how much time you're going to be investing. Then you're going to be going for reliable trading platform, or my broker is a cheater or not. Then you'll go for cost, what spread does my broker give me, and only the last you'll be talking about your emotions. By the way, talking of these factors, today's webinar is sponsored by Fidelis Capital. So if you are worried about your reliable trading platform or cost of your trading, you should definitely go ahead and check them. That's something that I would highly recommend. Now, let's get back to the concept of our trading. You should also be aware that 99% of the Forex traders are losing. And the reason is in thin lines. Every single trader, including you, whomever you are behind this line now, think always about the return. When you look at the chart, you only look how much profit you can make. And that's wrong. And I'm open for discussing this more in detail with you, but I'm 100% sure that's what you are thinking right now as well. Now, I want to deliver a couple of things to your attention. We will basically go through 3 scenarios with you where we will use great risk-reward ratio, poor, okay risk-reward ratio, and poor risk-reward ratio. And I will be telling you why good risk-reward ratio is not everything, and why you shouldn't really think of much about the return, but you should always consider how much you're risking. Now, the first scenario that we are going to be talking about, imagine that it is you, and since everyone is talking about you should always be using more than 1 to 2 risk-reward ratio, we will imagine that we are using 1 to 3 risk-reward ratio, which means we will risk $10 to make $30 all the time. So $30 is our reward, $10 is our risk. And on the other hand, we have win ratio of 20% and lose ratio of 80%. Now my question is, will you be profitable on a long run? And to be able to demonstrate it for you, every rectangle that I have put here, imagine that will represent one trade entry that you have taken. So the first two, let's imagine, since 80% lose ratio we have and 20% win ratio, the first two will represent our winning. So $30, $30, we made $60, and right after we go 8 times of $10 loss, which means that on the long run, for every 10 entries that we will be making, we will be losing 20 bucks. So that being said, although we are using a great risk-reward ratio, we are not really making profit. Now we go to the second scenario where we use 1-to-1 risk-reward ratio, which means that for every $10 that we are risking, we make $10. And we also have win ratio of 50% and lose ratio of 50%. Will I be profitable? And the answer is obviously not, because we are making 5 times $10 profit and 5 times $10 loss. So we ended up becoming not profitable at all, or standing at 0 level. And this is only the case if we don't have any swap or so. Now, finally, we go ahead and talk about the scenario 3, where we use 1 to 0.75 risk-reward ratio, which means that you will be taking $10 risk for every entry that you take in return to make $7.50 profit. And our win ratio, because we have reduced our targets for profitability, our win ratio has obviously dramatically increased to 70%, and our lose ratio is 30%. Will you be profitable? And the answer might surprise you. Basically, we are after 7 times 7.5 profit, and we are after having 3 entries of loss. That means that we will be obviously sooner or later making, for every 10 entries, around $20 of profit. And that's a great number for me. Now, if you remember the diagram I just showed you at the beginning, 6 elements of profitable trading, if you eliminate the middle part of this section that I showed you, so we eliminate the reliable platform, we eliminate the cost, we eliminate the time, and we of course eliminate the emotions, and we only keep risk and return. Why we want to keep risk and return for ourselves? It's in order for us to be able to define our probability, or in another word, our expectancy. If you want to define your probability of winning, you will basically need to have 4 variables. These variables are going to be your average size of winning entries, your average size of losing entries. You will also need to have average win rate, so how many entries out of every 10 approximately you make profit, and how many entries out of 10 you make loss. So, and that becomes your losing rate. Once you have those, you get to have your calculation formula for your trading. And it is the following. You basically take your win rate, multiply by your size of winning entries, and then you deduct your losing rate multiplied by your size of losing entries. And of course, if you are trading with a proper trading environment, you'll also have trading cost, and that cost will be your swap, your spread, and your commission, whichever one is applicable to your trading account. Now, if you put all these together, and if you then have a positive number as a result, that will mean that you will be profitable on the long run. So this is pretty much the end of the trading, today's training. But I want to bring you back to this diagram again. This is the first one of the profit factor elements webinar that I'm going to be hosting in the coming days. The next upcoming webinar, I will dedicate it to reliable platform and reliable broker. And from there on, we will talk about cost, time, emotions. And therefore, you should 100% make sure that you're going to be following each one of these upcoming webinars. And go ahead, make sure that you go through your trading background or your statements that you have so far, and make sure that you apply the results to your probability test. If your probability number becomes, or expectancy ratio becomes positive number, then it means that you are on the wrong on the right side. But on the other side, if your expectancy ratio becomes a negative number, it means you are doing something wrong and you need to urgently take a look at it. And you can always get back to me. I'll do more than my best to be able to helpful for you, and we can together be profitable. That's indeed my my motto. We can do it together, and we must do it together. Otherwise, the financial markets are a major pool of sharks, and you can only survive if you have the relevant tools behind you, including relevant skill set behind you. So that's it. If you put them all together, you will be overall profitable. That's it so far for today. Thank you very much for being with me. And if you have any questions, it's the time for asking the questions now. The first question is, what should be the minimum days or years should we have in our backtesting for risk-reward calculation? Again, I believe that you are asking about probability calculation. The market is always evolving. So if you go ahead a couple of years ago, as an example, my own strategy that made me 7-digit income in 2007-8 is actually not applicable right now to the current market environment. So you cannot just go ahead and take a long-term or very, very long-term backtesting. However, though, what you can do would be, or if I were you, this is what I would do. I would take a very small account, very small trading account, $100 to $500, whatever, which wouldn't really hurt me if I lose. And I would just go ahead and make a forward testing for 3 weeks. And I would also make sure that during these 3 weeks that I'm forward testing my account or my trading strategy, I have a major news coming up, like a ECB meeting or the Fed interest rate or BOE, something like this, that will have a major impact in the market. And then you can just take it forward from there on. And also make sure that you have minimum 25 entries. So the number of entries is the most important. In order for you to get a better statistical information on your entry or on your trading strategy, you need to have minimum 25 entries. Otherwise, 10 is kind of way too small. The best one will be 100 entries that you will take. For 100 entries, and take 0.01 lot, which will not really hurt you. Even if you have 100 pips of stop loss, it will go like $10 loss at a time. So that's what I would do if I were you. We have a funny question over here. Is it true that most brokers are trading against the retail traders? Well, let me put it this way. There are way too many scam brokers out there than you can think of. And unfortunately, most of them are the ones that you really know. On the other hand, what I have done, this question comes from Ripple Curtis. Ripple, can you write me where you are from very fast, please? And in the meantime, what we have done at A to Z Forex is we have created A to Z Forex broker directory. You basically need to go to a2zforex.com/directory. And you need to check the brokers in there. we have assigned a team of 5 professional traders to go through all the brokers globally, and we are putting for every broker $1,000, 5 people each. So we are testing with 5 different accounts every broker, and whomever is passing our execution, and whomever is passing our withdrawals, and also of course the customer service requirements that we have, we allow them to get the A to Z approved badge. So you can go ahead and check the brokers that have the A to Z approved badge, which means that they have already passed their test. And the other ones, whomever don't have their badge, it means they either haven't passed their test or they failed their test. So this is all I can tell you. And regarding the broker that you mentioned, you are from South Africa. Regarding your jurisdiction, although FSB is quite strict, you have also a lot of scams going on in your country. So I would definitely recommend you to go and make sure that you trade with one of the brokers that we have selected. Well, also something that you should be aware that Fidelis Capital is one of these brokers that we have selected, and we are not IBs nor affiliates. So you can basically we provide you protection as a major media influencer, as we have already tested and we are confident in these brokers. And if something goes wrong, you can always get back to us, and we will contact on your behalf to these brokers and find out what's really wrong with them. This is what we could do for you. And your broker that you are mentioning, unfortunately, I won't mention the name. We are still testing them, so we cannot really say yes or no for that broker yet. Any other questions? Tariq is also asking about a broker name. Just please go ahead, guys, to A to Z Forex broker directory, a2zforex.com, and you will see whether they are approved by us or not. I can't just spend my time say whether I recommend or not. The next webinar, this is a good question, Kim. The next webinar will be actually on Sunday, this upcoming Sunday. We are just going to be testing to see if it is if traders prefer having webinars on Sunday, and the time will be around pretty much the same time as now, and I hope that you all will be able to show up then.